markets are now very negatively biased towards this report. In other words, expectations are very high for a hot print in both of these indexes, the PPI and CPI. Typically, when you have a lot of very high expectations, everybody's kind of betting on one side, other things tend to happen. So if we do happen to get an inline or cooler report, we're going to see potentially a fairly decent move higher because the markets are oversold. That we could see the market push up to around the 50-day moving average here pretty quickly, and that would not be surprising at all. In fact, that could happen like in a day or two. So here's what you need to know before the bell this morning. Yesterday, we kind of opened the market, and we said yesterday morning that the market was going to open below the 100-day moving average, and it would be important for the markets to rally back and get back above that 100-day moving average before the close if the market was going to kind of find support here and not violate that support. Well, that's exactly what happened. We opened down below yesterday and then rallied back up and closed just above the 100-day moving average. So again, we saved that break of the 100-day. And again, this is one of the reasons we've said before is like, if you're using a moving average as a stop loss, don't initially react to a break. As soon as that break happens, like, oh my gosh, we broke the moving average, I got to get out, I violated my stop. Got to be careful about that because markets are oversold typically by the time those supports are getting violated, and as we were yesterday. And so we saw buyers step into the markets yesterday and push prices back up. And now this morning, futures are pointing higher, at least at the moment. Now we're going to go into the PPI report this morning. If that number comes in exceedingly hot, that's going to weigh on the markets for sure. CPI tomorrow is going to be the same way. So lots of volatility potential here for the next couple of days. But the one thing is that markets are now very negatively biased towards this report. In other words, expectations are very high for a hot print in both of these indexes, the PPI and CPI. Typically, when you have a lot of very high expectations, everybody's kind of betting on one side, other things tend to happen. So if we do happen to get an inline or cooler report, we're going to see potentially a fairly decent move higher because the markets are oversold. That we could see the market push up to around the 50-day moving average here pretty quickly, and that would not be surprising at all. In fact, that could happen like in a day or two. So again, a couple of weak reports here today and tomorrow, certainly biased for the markets. Again, we're oversold enough here for a decent bounce. We're not going into this report in an overbought condition, and we've had a good slate of selling now over the last couple of weeks. So again, a nice reflexive bounce here would not be surprising at all. Now, having said that, I would certainly use any type of reflexive bounce here to rebalance risk in your portfolio, particularly if you've got a lot of overweight positions, things that have been weighing on you lately, positions that haven't been working. This is a really kind of good time to look at those and say, okay, do I need to rebalance some risk here? Trim some of this that's been doing really well off, take some profits, buy something else. Just raise some cash, use that rally here to do that because we simply are not out of the woods just yet. And with the 20-day crossing below the 50-day, which happened yesterday, that's going to at least keep a lid on any rally here short term until the markets can get back above that resistance level. Now, once you get through that level, then we're back off to the races, but that's probably not going to happen in the first attempt. So some more volatility here, at least through the end of the month, would not be surprising. Now, having said that, we're about to move into earnings season starting on Thursday. And right now, traders are betting on the most volatile period. They're expecting a 4.7% move based on earnings announcements, one way or the other, which is the largest level of volatility on an earnings announcements on record. So again, lots of volatility ahead. So being a little bit more cautious here may actually help you out a bit. So that's what you need to know before the bell this morning.